Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Hezbollah accuses Israel of orchestrating a pager attack that killed several people and wounded almost 3,000. It's ramped up fears of an all-out war. The dollar resumes its downward trend as traders debate the size of the Fed cut later today. Market-implied odds put the chance of a half-point cut at just over 50%. Plus, devastating floods in Africa displaced millions and killed about 1,000 people. It's also destroyed crops in an already food-insecure region. Well, it has just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai. As ever, such a busy show to get through. We're going to bring you all of the latest developments from the region once more with that large-scale pager attack in Beirut. But before that, let's just focus on the markets for a moment because it's finally here. It's Fed Day. We will finally find out whether the Fed are going to go for a 25 or a 50 basis point cut. And of course, the market is very, very split, leaning towards 50 basis points at this point. If you look at what's priced into the market, equities don't really know what to do. As you can see, we're trading sideways. A lot of nervousness as we head into that big decision. Yesterday, another roller coaster ride for the S&P. At one point, we did reach all-time intraday highs, but then we pulled back again. But the point is, a lot of nervousness prevailing as we head into that decision. S&P futures up about 4 or 5 basis points. Similar theme for NASDAQ as we continue to talk about that rotation that is taking place, especially in the context of defensive versus cyclical. So over the last couple of weeks or so, we've seen a lot more money go into some of those defensive sectors. U.S. dollar, again, continuing its downtrend. We're about 0.1% weaker today, but the theme for the year has been one of the dollar declining as the market starts to price in a more aggressive easing cycle out of the Fed. And then Brent, we did see a bit of an uptick yesterday towards the end of the session, especially as that news emerged from Lebanon. And again, reignited fears of a full-blown war in the region. What we saw is energy spike 1.5%. Today it's coming off 0.4%, but again, geopolitics squarely in focus there. Switching over, and let me just show you finally what the markets are pricing in. This is, as you can see, the odds ever since a week or so have climbed more in favor of a 50 basis point cut today. So we're looking at about 60% probability of a 50 basis point cut. And the reason that we started climbing, you'll see on the 13th, around 12th, 13th of this month, was because of some of the Fed comments that came through, the likes of Waller, Mary Daly, all indicating that they may feel more comfortable going for that 50 basis point cut. So the messaging from the Fed has leaned towards a 50 basis points, at least if you look at some of the members. All right, let's also check in on how markets in Asia are faring. David Ingles is in Hong Kong. Always good to have you with us on the show, especially on such an important day. How does the Fed decision later today matter for some of these Asian markets?
Yeah, well, for one, it's nice to be on the show again on such a key day. I mean, finally, we'll find out 25 or 50, won't we? As far as that specific part of the market conversation is concerned, that's showing up as far as dollar-yen is concerned. It's not on the graphic right now, but in the last, I would say, 30 minutes or so, we've actually seen a further leg lower in the Asia-Pacific index. Still range-bound, though. Volumes are still on the lighter side. We have a couple of markets shut. But a lot of the pull that's taking place these last 30 minutes is really from that afternoon reopen in Japan. So the Nikkei's actually session lows. Dollar-yen is, again, seeing a further leg lower, maybe on the back of bets that the Fed might be able to narrow that gap even more with a 50 basis point cut. All that being said as well, the encouraging sign in the Asia-Pacific is while we are getting the benchmark flat, some of the EM plays in the region, like Thailand, I think the Philippines is bottom of your screens, is seeing some money come in, which might indicate, of course, the sort of EM, the long EM trade that an easing Fed allows even incrementally further. CSI 300, just very, very quickly here. China reopens today, mainland China reopened today. Not really seeing a lot of reaction in the markets to the bad data. Where that is showing up, though, I'll end on this. Iron ore prices in Dalian, in Shanghai, well, in mainland China are down. And also in the bond markets where the 10-year yield is down for a 7th straight day. We're now within a conversation here of taking out the 2% target. We can talk about that later, but yes, lower yields in China indicate, of course, concerns there, Jomana, of the soft numbers coming out of the mainland economy there.
Yeah, that bond rally in China just keeps going. David Ingles, thank you so much for the overview. That was David Ingles in Hong Kong. Well, Iran-backed Hezbollah is accusing Israel of orchestrating an attack that killed several people and left almost 3,000 wounded across Lebanon. A string of medical emergencies were reported across the country following the mysterious explosion of thousands of pagers. Israel has so far not commented on Tuesday's events that left hundreds of members of the Hezbollah militant group injured. So for more on this, I'm happy to say that Bloomberg's Dan Williams joins me from Jerusalem. But first, let's go to Dana Khreish, Bloomberg's UAE bureau chief, who joins me now. Dana, a massive security breach for Hezbollah intelligence, pretty unprecedented in nature, large scale. What do we know about this attack?
Right, very chaotic scenes yesterday in Lebanon, several parts of the country, in the south, in the Baqa, and especially in Beirut's southern suburbs, where Hezbollah has its own offices and centers there. Simultaneously, thousands of pagers exploded in the hands of Hezbollah members and others who work at Hezbollah centers or supermarkets. We saw the videos where it just exploded. Most of these injuries, at least 3,000 of them, have been in the eyes, the hands, the belly area. And Israel, and of course, Lebanon immediately accused Israel, and so did Hezbollah, of being behind the blast, calling it a violation of its sovereignty. And we saw Lebanon's cabinet yesterday in what I would say a rare moment, a rare instance of unity. There were no accusations, no criticism of Hezbollah, which is usually very common and popular in Lebanon when things like that happen. But it felt like people were in shock and they were angry at what happened. At least 8 people were killed from yesterday's official death toll. We saw Hezbollah also mourning the killing of several of its members, including a little girl, it seems, and the health minister saying 200 are still in critical condition. This is definitely a major security breach for the group, and we saw today in Al-Akhbar newspaper, which is a newspaper close to Hezbollah, saying that these pagers were part of a shipment ordered by the group. So this is, of course, eliminating any other theory that would say these were remotely, detonated or virus-wise, and maybe they were just detonated.
Let's get out to Dan. Dan, so far we haven't had an official response from Israel, no official comment, but we do know that Israel recently introduced another war objective. Netanyahu made that very clear yesterday, in that he wants to refocus again on security on the northern border and allow some of those Israeli citizens to move back to their homes. How does this all factor in to yesterday, do you think?
Well, that's correct. The timing is very telling. This came just within hours of Israel's decision-making security cabinet expanding the war goals that it passed back in October when the war with Hamas erupted. Those goals have now been expanded to include the stipulation, the binding stipulation, that Israel must return some 50 or 60,000 residents displaced from the north to their homes. That was a clear signal, another signal, that Israel was taking seriously its confrontation with Hezbollah and was willing to escalate. I think the natural expectation was that a classic conventional offensive would follow, and on the assumption that this mass pager sabotage was the work of Israel. Israel has not confirmed it, neither has it denied this. And it would appear that Israel has gone for something well below the threshold of a bombing campaign, airstrikes, something that would have caused large-scale infrastructure damage in Lebanon, perhaps civilian casualties on a large scale, to something far more targeted, something that may have actually taken a big bite out of the fighting capacity of Hezbollah, if we are to believe initial reports suggesting these beepers were distributed specifically to a command echelon of the group as part of a backup call-up system, and they were essentially wounded, some seriously and some fatally, by devices carried very close on their persons.
Dana, given how big a blow this has been to Hezbollah's intelligence, there's lots of chatter, and this is quite common in this part of the world, that perhaps this could be foreboding in the sense that Israel could be readying themselves for a more broader, full-scale attack into Lebanon. What is this perspective right now from Lebanon? What are Hezbollah saying? Is there a sense that this could actually lead to a bigger war between Hezbollah and Israel?
I think the fear of an all-out war between Lebanon and Israel has been there ever since October 7, ever since that Hezbollah fired those rockets in support of Hamas in Gaza and all that's happening there. In the Akhbar newspaper, they ended their opinion column with a very interesting line saying, yes, we've always been brave and courageous, but maybe it is time to open the door for a little crazy to reign in Israel. And that it shows you how angry and in shock Hezbollah members are. And Hezbollah supporters as well, they've been under heavy burden, pressure, displacement, right? Their homes have been destroyed. Hezbollah is not necessarily losing their support, but people are growing very tired of the war. It's been a year. They've been out of their homes. And Hezbollah is also taking a big hit. This is not only injuring 3,000 of their fighters, but also Israeli strikes have definitely targeted their stockpile of weapons. So they're being targeted and they're also being used daily on that border. Yeah. So the prolonging of this, I don't want to call it calm, but the prolonging of this is definitely hurting the group. Yeah. And a war would even be maybe a moment of do or die for Hezbollah.
Okay, yeah, well, the optics are important as well because all of a sudden Hezbollah appear to be on the defensive now. Dana Khrish, thank you so much for the reporting. Dana Khrish, Bloomberg's the UAE Bureau Chief, and of course, Dan Williams, who is in Jerusalem. Thank you very much for giving us the perspective of what is going on. Now, sticking with this region, in my exclusive interview with the Iraqi Prime Minister, I did ask him about the evolving relationships across the Middle East and the role that Iraq can play. All right, so we will play more of that interview later, a part of my exclusive interview with the Prime Minister. But the Iraqi Prime Minister also spoke to me about the Development Road project, what he called a dream project for Iraq. Work is underway to launch a $17 billion railway corridor that links Asia to Europe. It starts at the Fao port in the south of Iraq, runs through Turkey and onto Europe. Al-Sudani told me the road makes sense because of recent events in the Red Sea and subsequent rise in the prices of maritime insurance, and that it will be the least costly way to transport goods in the region. Bloomberg earlier reported that 3 other countries had expressed interest in being part of the funding, including the UAE, Qatar, and Turkey. It is expected to be operational as of 2028. But for now, let's turn back to the part of the interview where I asked about Iraq's broader role within the Middle East.
First of all, the visit by the Iranian president to Iraq is a normal, usual visit, and it's part of Iran's view on the importance of Iraq for regional stability and to improve the bilateral relationship in which we share interests and many ties. And it comes within this context. The assassination of the martyr Ismail Haniyeh is certainly an operation that overstepped all diplomatic norms and international laws. Iran announced in a clear and honest way that this operation violated its principles, values, and honor, and these terms were used for the first time because they're important and hold meaning. The government announced it has the right to response. Iraq's position amid these developments since the start of the crisis and events on October 7th, we were keen to preserve our fixed and principled position, and that's what we expressed at all levels, popular, official, and even from religious authorities from all factions and religions. On the other hand, we tried to move Iraq away from the arena of conflict. We fought wars for the past 4 decades, and it's normal we place the interest of Iraq and Iraqis above all else, and of course not at the expense of our principles, but it's very important not to slide into the fighting arena that the region is witnessing.
How do you balance Iraq's closeness and historic proximity to Iran with its growing mediator role within the region, particularly with the likes of Saudi Arabia?
This is part of our vision of the leadership role that Iraq should have, and it's a natural role given its history, effective role, and contributions. It's in Iraq's interest to have understandings and proximity between the regional countries, especially between our neighbor Iran and the brothers in Saudi. and between the rest of the Arab countries. Therefore, we sought from the beginning, and as a continuation of the steps initiated by previous governments, to adopt this vision and implement it, and that's what was achieved, thank God, with the recent rapprochement between Saudi and Iran.
Another really important part of my interview with the Iraqi Prime Minister Mohammed Shia Al-Sudani, talking about them taking on an increasing mediator role within the Middle East region, and also saying that they don't want to be dragged into a broader regional war. Now, coming up, as we count down to the Fed's rate decision later today, we'll hear the view of Emirates NBD on how far they think the Fed will go. That is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Well, the Fed is widely expected to lower rates today, but by how much is the question. Markets are pricing in more than a 50% chance of a half-point cut. And Bridgewater Associates founder Ray Dalio says the overall picture of the U.S. economy actually warrants a smaller move.
25 or 50, it doesn't make a difference. I think that's the problem with the news cycle and all of this. They're losing sense of the bigger picture. 25 basis points is going to be would be the right thing to do if you look at the whole picture as a whole. If you look at the mortgage situation, which is worse and that affects more people, then it's probably 50 basis points.
That was Ray Dalio. Let's bring in another market great, Anita Krishna Gupta, head of equity strategy at the CIO Office at Emirates NBD. Good to have you with us. 25 or 50, which camp are you in? And does it matter?
Okay, good morning, Jumana. What an exciting day to be here. Absolutely 25 basis points, that's our in-house call. Yeah. With another 25 basis point probably in December and a November one depending on how labor data goes.
Yeah. How much do you think the Fed are going to be leaning on the dots today to guide further messaging? And I had actually forgotten that back in June, they still only had one cut priced in for the end of the year, 25 basis points. So we will likely have to see a revision of the dots. Could it be possible that they sort of balance the interest rates decision with some guidance on the dots? If they go 50, they go slower with the dot expectations, and if they cut 25, then they go bigger.
So I think that either way, even though our expectation is 25, if it's a 50, then I think it will be a more moderate cut later into the year.
Yeah.
So we are looking at a 50 to 75 this year, and I think the Fed, the market is pricing in about 100 basis points. Also, what's more important is what the Fed says about the economy and labor. You've also got their quarterly projections, economic projections, which are going to be out today. That's also going to be closely watched in addition to the dot plot.
How do you think the market would react in an extreme dovish scenario? So let's say they do decide to cut 50 basis points and then they signal that there could be other jumbo cuts to come as well. Would that be a good thing for markets?
I think the market would absolutely not be happy. There would be panic because right now what we're looking at is moderating inflation, moderating labor data. We have had great industrial production numbers out yesterday. I mean, in sense of great is that, they're positive. We have also had good August retail sales, especially, on the discretionary items. So keeping all that in mind, the market's in a very happy mood. We've got all-time highs for the S&P 500, NASDAQ doing well. So if we expect that the Fed does cut more, the market would start worrying that is the economy in trouble?
Yeah. Where do you think the Fed will likely end up in this rate cutting cycle? I mean, there are lots of, that becomes a more medium-term question about where the new neutral rate should be in this environment of deglobalization, friendshoring, artificial intelligence, etc. It's a bit of a question mark, but do you have a view on where this rate will end up?
Well, what we are looking at is 50 to 75 basis points this year. We're looking at 100 basis points next year, a neutral rate somewhere, around 3% looks, likely, which also keeps in mind, what would not be bad for the economy, not bad for the consumer. We've also got other factors to build in when the Fed looks at cuts. You've got elections coming up, and there is, of course, no interference from government with monetary policy. So they've also got to keep a moderation in terms of what's going to be happening.
It just seems to me that obviously central bankers receive a lot of criticism and scrutiny, and it's right to be criticizing or analyzing what decisions they're making. But if the Fed chair, Jerome Powell, succeeds, then he will probably go down as one of the greats, similar to Alan Greenspan, because they would have succeeded, quote unquote, at fighting inflation without actually engineering a hard landing.
Absolutely, because what we have seen is that we have had the highest interest rate for over a year in 2 decades, and you've still got economic growth at about 2.5% for the US, this year, and about our expectation is about 1.75% next year. You've got consumer retail sales that continue to grow. You've got a very strong equity market. Bond yields have come down. We are also seeing now, mortgage rates starting to come down. We are seeing housing starts re-emerge. So definitely, if you look at what Jerome Powell has done, I think that, it's there's no blame game here. Of course, there will always be a lot of rhetoric around he could have done this or done that.
Yeah.
But I think that the U.S. has at this point managed to come out pretty strong in terms of economic growth.
Yeah. Just a final one for you. I've been talking about how defensives have been outperforming cyclicals into this event in the last couple of months. Do you expect that to continue?
Yeah, absolutely. Actually, what we saw quarter to date, July and August, we have seen resurge in healthcare among the better performing sectors. So at this point, you've got technology, we've got financials, we've got consumer staples. So these are the three which have been performing. Now, consumer staples and healthcare have definitely been the outperformers this quarter so far.
Yeah. Anita, going to leave it there. Thank you so much for joining us. Anita Krishna Gupta, Head of Equity Strategy at the CIO Office at Emirates NBD. Thank you. Well, still ahead, we're going to get the details about why a Saudi PGA deal remains elusive, as well as what a DP World and Nedbank tie-up could mean for small trade businesses in Africa. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, let's get a quick market check. It is a huge day today. It is Fed Day. We will find out later on today whether the Fed will opt for a 25 or 50 basis point cut. But as we've been talking about, it's not just about the decision itself, but about the language, especially what they have to say about the state of the labor market and some of the weakness that is coming through there. And then keep a special eye on the dots as well, and the guidance that they're going to offer in terms of further interest rate cuts to come. So S&P and Nasdaq futures all leaning towards the green now, about 0.1% higher. We've got Euro Stoxx future also slightly dipping as we head into the European session. A lot of nervousness prevailing ahead of today. The market is leaning towards that 50 basis point cut, but we will talk more about that. Coming up, Franklin Equity Group shares their investment strategy as traders debate the scale of this Fed's anticipated rate cut. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Hezbollah accuses Israel of orchestrating a pager attack that killed several people and wounded almost 3,000. It's ramped up fears of an all-out war. The dollar resumes its downward trend as traders debate the size of the Fed cut later today. Market implied odds put the chance of a half-point cut at just over 50%. Plus, devastating floods in Africa displaced millions and kill about 1,000 people. It's also destroyed crops in an already food-insecure region. It has just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. It's also Fed Day today, and we've been talking a lot about it, but the market is leaning towards a 50 basis point cut. At this point in time, we had a small uptick yesterday for the S&P, a lot of nervousness as we head into that big decision, but very, very close to all-time highs for the S&P today. The future is not doing a lot, but trading slightly towards the green, up about 5-7 basis points respectively. The dollar obviously always in focus as well. We have been trending lower since the start of this year, simultaneously in tandem, you could say, with the market's expectations of what is to come out of the Fed. So as the market starts factoring in more dovish rate cuts and a more dovish path, the dollar has been dropping. And then Brent, we did see an uptick in yesterday's afternoon session, especially once news of that Hezbollah pager attack came through in the afternoon. That brought about a 1.5% jump in the energy complex. Today we are pulling back, though, down about 0.4%. So geopolitics back in focus there. But I want to go back to what the market is thinking about today, and specifically what JP Morgan CEO Jamie Dimon had to say. Listen to this.
It matters to me because I have to listen to all that people yapping on TV all the time about something that's almost irrelevant. I mean, they're going to do it, 25, 50 basis points. It's not going to be earth-shattering. It doesn't mean that much. I mean, I think they need to do it. So I'm not, I think Jay Powell does do a great job, but it's a minor thing.
All right, let's get out to David Inglis in Hong Kong. I think it's fair to say, David, that today doesn't seem like it's going to be the most important day of Jamie Dimon's life. But given that you and I are yapping away on TV, what are you thinking?
Well, for one, I feel targeted, and I'm sure you do too. And since we have about, 13 hours and 30 minutes before we actually find out whether it's 25 or 50, I guess, there's another 13 hours of yapping that's going to be taking place across these markets. At least I'm almost done, and I'm just passing it on to you guys and, of course, the rest of our colleagues on EMEA. Well, there are other things that, I guess, to his point, that perhaps matter more as far as the Fed conversation goes, right? I think, for one, what we haven't talked about is you have at least 10 other central bank decisions taking place on top of the Fed, number one. Number two is, what will the dots show? Right? How much do the dots open up further downside in the U.S. dollar? In fact, there's a great report out of HSBC, and I'm just sending that to you right now, Jemana, to your inbox. You can check that out. It's from, it's the major bond letter here from Stephen Major, and he said, we can over-obsess over 25 and 50. What we really need to know is where rates settle at the end of the cycle. And do we actually get the 250 basis points that are currently priced into this market, right? So I think that's perhaps the other thing we'll need to focus on when we look at the new dots. In the Asia-Pacific, I think that's showing up in the form of a stronger yen again today. If we get 50, that means perhaps more downside in the Japanese currency. In the market store today, that's pulling down the Nikkei, which is pulling down the regional benchmark. Not much reaction as far as China goes to the data which came out on the weekend. Where that's really showing up, though, as far as the weak China story, is in iron ore prices and also this drop in yields that we're still seeing right now. Just a housekeeping note, we don't have trading in Hong Kong today and also in South Korea, so volumes are also on the lighter side, which means, since it's a holiday today, that about wraps up my working day today and all my yapping, and I'll just toss it over to you guys to continue all this productive conversation.
Yapping. I've also got to say I'm pretty impressed at your ability to give us a market recap and simultaneously send me bond reports. It's quite something. It's, very special. Very special skill there, David. Thank you very much for bringing us the latest. All right, the crucial thing for markets is whether traders see a Fed move of either 25 or 50 basis points as a trigger for risk on or risk off. Investors will also be watching the central bank's long-term dot plot forecast and Jay Powell's news conference. So joining us now to discuss more is Grant Bowers, Senior VP and Portfolio Manager at Franklin Equity Group. Okay. So we've had a couple of flippant comments from Jamie Dimon, from Ray Dalio, and of course they can get away with saying such things. It does matter whether it's a 25 or a 50 basis point cut. What do you think it means for equity markets, just for the indices?
Broadly.
Yeah, broadly.
I mean, I think it's fantastic that Jamie Dimon can pontificate. He always has good insights. I think, our view is that the Fed has telegraphed pretty well that 50 basis points is coming. We've seen it come through some of their traditional sources that they communicate to the market. A number of Fed members have talked about 50 basis points. The market is split on it, 50% either way.
Yeah.
I think the reality is, from a market perspective, the Fed has room to cut 50 basis points to get closer back to neutral and really begin sort of the rate cutting cycle in earnest. And then for the rest of the year, we can talk about the projections, where those come out, as well as be more data dependent and get more data on employment, growth, and some of the big factors.
Yeah, and so the dot plot actually may play a role there. When we talk about the run-up to today, because obviously it is a pivotal day for the Fed, it's going to be the first rate cut in years, stock markets have really done well, and we're sitting very close to all-time highs for the S&P. Do you think what is driving that is expectations of the monetary easing to come, or has it been more secular stories, micro stories?
I think it's actually been a combination of surprising resilience of the U.S. economy. So we've seen the strong earnings. We've seen the consumer has been surprisingly strong to many.
Or the retail sales numbers.
Retail sales, employment, even though it's ticked up a little bit, remains quite healthy. We've seen wage growth, and that's been very supportive of consumer spending. Corporate earnings have been strong. And so I think that the fundamental backdrop for the U.S. economy has been very good. Monetary easing will, I think, be a tailwind for the rest of this year and probably into 2025.
And again, another theme that has emerged again in the last month is this rotation that's taking place out of cyclicals into defensives. Do you expect that to continue? And what scope do you see looking ahead into next year for these so-called Magnificent Seven stocks to continue leading?
Yeah, I think so. We're based in California, and we have been U.S. equity growth investors for almost 50 years now. And we've known the Magnificent Seven for many years. We understand the value that they bring and the powerful sort of competitive positioning. And we're big fans. But we do believe that the market will broaden out. And I think much of this rotation that you speak of is really a shift from a very narrow market that's been concentrated around the Magnificent Seven to a much more broader, inclusive market. And that's going to not just be mega cap names, but also large, mid, and small cap, but also industries beyond technology. And we think that's going to be a really interesting dynamic over the next year.
I mean, one of the other characteristics of Magnificent Seven, not all of them, but for most of them, is their profit margins. They tend to be very wide and very large compared to other sectors, more mature sectors. I just wonder, in an environment of disinflation, whether companies can hold on to those margins or whether there's going to be pressure coming through there.
Yeah, I think you'll see that probably impact some of the more cyclical sectors where pricing power was really held in reserve for many, many years. And then they had a period of price increases around inflation. As inflation has come down now closer to the target of 2%, those cyclical companies will have a much harder time getting price. The Magnificent Seven should be able to continue to maintain their profit margins as they aren't as dependent on pricing power, much more on the sort of strength of their competitive position.
The other question that I'm genuinely curious in hearing your perspective on is, to what extent is this Magnificent Seven or even the whole market dependent on one stock, and that is NVIDIA? If NVIDIA, for whatever reason, we have seen a little bit of a pullback now. Obviously, the rally has been huge. But if NVIDIA single stock starts faltering, is that going to send warning signals throughout the broader market simply because of what it represents?
Yeah, I think NVIDIA really is sort of the key player in the generative AI, I don't want to say trade, but boom that's going on. And our view is that we're still in the very early days of what probably will be one of the largest platform shifts we've seen in technology in our lifetime. We would equate it equal to the rise of mobile, even the birth of the internet. This is a massive investment cycle, and NVIDIA is the poster child right now. They are the clear winner. We think that while they are very important, there are a number of other players out there. And the generative AI investment cycle is starting right now with what you would call sort of the build phase. And we're going to see it move into more of an experimentation phase and ultimately applications. And that's where I think everybody, rank and file on the street will start to use these applications. We'll start to see monetization. And then from an investing standpoint, the universe will be much broader than just NVIDIA is today.
So it's positioning yourself for that more broad and wider scale uptake of
Absolutely.
AI. Well, lovely to have you on. Thank you for visiting us here all the way from California. So it's good to have you on our show. Grant Bauer, Senior VP and Portfolio Manager at Franklin Equity Group. Well, coming up, at least 4 million people across Africa are left homeless and hungry as record rainfall hits multiple countries. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Port and logistics giant DP World is teaming up with Johannesburg's Nedbank to expand trade financing to small businesses. The deal aims to help businesses facing working capital challenges across sub-Saharan Africa. For more on this, Bloomberg senior Africa reporter Loni Prinsloo joins us now. Loni, just walk us through why a deal like this is so important for African trade.
Good morning, Jumana. basically, the bulk of African companies are in this space where it's small and medium companies. So what this does for them is you combine the logistics network of DP World, who actually also bought a big South African logistics company called Imperial recently, of course, with the financing capacity of Johannesburg's Nedbank, and that in turn gets the money to the suppliers earlier. So, because, of course, the biggest risk is for these businesses are not being paid in time and they're not making it as a business. For Africa, the current trade financing deficit is quite big at the moment. It's between $80 billion and $120 billion.
And how does it, how could it assist African suppliers going forward, looking ahead to the future?
So in terms of, as I said, Africa, there's a lot of small farmers, there's a lot of smaller businesses. And on top of that, the continent is planning to open up its borders for inter-Africa trade. So that, of course, is a huge opportunity, but they need the tools in terms of financing tools to make this happen and to boost trade, inter-Africa trade. So when you use a tool like this, as I said, the suppliers get their money earlier, and it also protects the buyers in turn.
Makes sense. Bloomberg's Africa senior reporter Loni Prinsloo, thank you so much for bringing us that important story. Now, Microsoft and G42 are establishing 2 artificial intelligence centers in Abu Dhabi. This comes months after they linked a $1.5 billion deal and the UAE firm agreed to divest from China. Microsoft is also planning to open its first AI for Good research lab in the region to support social goals, such as advancing food security and strengthening climate resilience. G42 had drawn criticism in Washington due to its alleged links to Chinese businesses, including Huawei, but the Abu Dhabi-based firm denied it had connections to the Chinese government and its military-industrial complex. Now, floods across Central and West Africa have affected at least 4 million people and killed about 1,000, while devastating crops in a region already short of food. Researchers are blaming this year's deluge on global warming as temperatures rise, hitting a region poorly prepared for climate-related disasters. So for more on this, let's bring in Bloomberg's Ondiro Ganga, who joins us from Kigali. Ondiro, what is the extent of this flooding in West Africa? It just feels like another climate-related shock to hit the continent.
Jumana, you're absolutely correct. If we look at Nigeria, this is the worst flooding in 3 decades. And, you know, it has hit them really hard. The UN estimates that nearly 600,000 people have been left homeless. And the most affected region is the northeastern state of Borno. This is the region that was just beginning to recover after years of conflict. And now the infrastructure that they just rebuilt, schools, hospital, roads, all submerged. In Niger, also, the rains are causing havoc. The country, parts of it are flooded. 400,000 people have been displaced. Their roads are impassable. They've drowned. So buses have been replaced by canoes, and the cost of food is really rising. Locals are saying they've never seen rains like this before, and they fear that irreparable damage has been done to their crops. And the same applies to Chad, where 260,000 hectares have been submerged, 60,000 livestock have drowned. And the UN fears that food insecurity is going to be a real challenge in the short term and even long term, because this is a country where 3.4 million people are at risk of acute hunger.
Yeah. And how is the rain impacting people and economies in the region, Ondiro?
Jumana, the impact is insurmountable. Estimates are being shown that 500% more rainfall is going to fall this September, and it comes at a crucial crop period. And so there's likely to be a huge impact on agriculture. If you take a look at Chad, their millet, their sorghum, their rice is going to be heavily affected, and this is going to affect their food production and food supply. If you also look at it from a climate change perspective. This is some of the poorest countries in the world, Chad, Niger, Mali. They do very little in meeting climate change in gases, yet they're paying a hefty price in terms of the effects of climate change. So moving forward, these countries will need a lot of money outside of humanitarian assistance to build back and build back better. They need climate resilient infrastructure. They do not have the internal financing to do it, so they're likely to look outside for external financing.
Yeah. Andir, thank you so much for bringing us that report. Andir Oganga in Kigali. Well, coming up, we look at why talks remain in the rough as PGA and LIV golfers try to reach a deal. More on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, talks between the PGA Tour and the Saudi-backed LIV Golf are dragging on a year after the rivals announced the tie-up, which shocked the world of sport. Discussions remain on shaky ground, with players arguing over pay. So for more on this story, Christine Burke, our Saudi bureau chief, joins me in the studio this morning. I remember exactly a year ago when this announcement came out. It was such a big deal, and yet the talks seem to be dragging on. Just how did we get to this point?
Well, first, Juman, I want to take a moment to give a big shout out to our sports team for landing this scoop, because this is a really fun story. We are seeing some really good details come through here about what is going on. But first, let's walk back and take in some context, if you will. If you'll recall, back in 2021, that is when the Saudi Arabian Sovereign Wealth Fund launched LIV Golf as a rival to the PGA Tour. And then in 2022, we saw LIV going out and luring players from PGA to LIV.
I remember that.
They were offering mass amounts of money. I mean, we're talking about hundreds and millions of dollars a year. And obviously, this is something that did not go down very well with the PGA. That led to a bit of drama, and ultimately we saw that deal in June of 2023, or rather that agreement for these two to combine forces and to create a new combined entity known as PGA Tour Enterprises. This is a new entity that is intended to have a value of $12 billion. But here we are, as you said, a little over a year later, and we don't seem to have made that much progress on actually getting that deal over the line.
Right. So what exactly are the stumbling blocks then? Where are the obstacles coming from?
I think there are two key things, really. The first, and probably the juicier part of the story that we should talk about, is there is a dispute between players over pay. So what sources have told Bloomberg is that PGA players want those that jumped ship and went to LIV to be penalized for that decision. Specifically, they have asked that LIV players give back the winnings that they've made from LIV. Other things that they have floated include forfeiting future winnings and then potentially even paying fees for playing in future events. I mean, you can see why this is a dispute, right? This is something that's not going down very well with LIV golf players. On top of that, there are also some issues that need to be worked out when it comes to the financial terms of the deal. Saudi Arabia is looking to take a minority stake in this PGA Tour Enterprises. We are told, though, that there were talks in New York last week between LIV and between PGA officials, and there was some progress that seems to be made, but I think this was more down to the financial details and not so much down to this fight between players over bags of cash.
Well, what happens if these differences can't be resolved and the deal falls apart? What happens if this deal actually falls apart?
I mean, honestly, it's probably not great news for the golf industry. So already we have seen that since this rivalry came about, it hasn't been good for PGA or for LIV. I mean, not only because they've had to probably spend, presumably, loads of time and money on the legal fees and everything else involved with getting to this point in time, but also PGA viewership has been down. LIV has struggled to bring in mass viewership like it has wanted to. So I think, maybe they are better together. It's not for me exactly to weigh in on, but one thing that sources did say is that there is a real concern that the Saudis could potentially walk away from this deal. And if they do that, I think what we're looking at is a Saudi Arabia that will double down on LIV golf and probably work even harder to lure players from the PGA. So what does that say for golf, right? It takes us back to where we were in 2021-22.
Yeah, so interesting. And also the big challenge for golf, as you say, to bring in spectators, new players, and also attract younger players. It's known to be one of those old men sports. At least I tell my husband that. And very elite in circumstances. So really interesting story, and one that we certainly want to hear developments from. Christine Burke, our Saudi bureau chief here. Now for a look at some of the other stories we're following as well today. Saudi Arabia has announced its third major deal this week in metals and mining as the oil-rich kingdom expands its industry. Saudi Arabian Mining, also known as Ma'adin, says it is buying a 21% stake in Aluminium Bahrain worth more than $1 billion. The agreement is seen as a step towards consolidating aluminium operations between both countries. Egypt says Saudi Arabia's sovereign wealth fund is set to invest $5 billion in what would be the latest Gulf funding for the North African nation. Cairo says the kingdom's crown prince ordered the public investment fund to take this step as a first phase of new Saudi investment. Gulf countries have been a key source of investment for Egypt, which is coming out of 2 years of turmoil after securing a $57 billion global bailout led by the IMF and the UAE. So interesting to see Saudi getting involved there as well. And it is a big day for the Fed. If you haven't caught the first 56 minutes of our show, then we'll remind you now that it is the Fed meeting day today, and markets are sitting on or leaning towards a 50 basis point cut. But of course, all of that will become clear later on in the day. Watch out for Fed messaging, some of the language around the labor market, in addition to those dot plot projections as well. This is a picture for yields as we head into that all-important historic decision from the Federal Reserve. But that was it for Horizons Middle East and Africa. I'm Jemana Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.